In scope of total income, last class we have seen up to section 7 and an illustration. Now we'll be dealing with section 9. Section 9 is all about income deemed to accrue in India. Income deemed to accrue or arise in India. Okay. Income from connection in India, through or from connection in India. Clear? Maybe business connection or any property, any assets and source which is having Indian base, transfer of capital assets, all the three will be considered as income from connection in India. Automatically it is deemed to accrue in India. Okay, USA, India, USA and India. A gets some rental income from B. Okay, rental income or sale consideration for the property in India. There is a house property or any other property in India. For transferring the house property, probably, okay, A gives his house property to A's parents, gives the house property to B's parents. For that, rent payment is done outside India. This rent payment is only for the property in India, the basis in India. Though the rent is received and transferred between these two parties outside India, yet it will be considered as deemed to accrue only in India. Deemed to accrue in India. If it is being deemed to accrue in India, automatically it is an Indian income. Okay. Received, deemed to be received, accrue or deemed to be accrue. Deemed to accrue. Even satisfaction of one of the conditions is enough to qualify this being the Indian income. If it is being the Indian income, it is going to be taxable in the hands of all the SSC. Business connection, any property, any assets or any source of income in India. For example, rent paid outside India for the property, plant, equipment situated in India. Interest earned on deposits with Indian company. You might have deposited in Indian company, further you are getting the interest when the interest is received outside India. Okay, then also it is considered as deemed to accrue only in India because that interest income is nothing but the income you are receiving from Indian company. Any capital assets, rather than it may be letting out of the house property or transferring the house property from A's parents to B's parents. For that, B settles the payment to A. That will also consider as deemed to accrue or arise in India. So first one is related to the connection. Second one is all about salary. Okay. C. Okay. A being the employee for probably some employer. He rendered service in India. Sometimes later, his retirement life from India to USA, he shifts in himself. Probably after the retirement, he wants to settle down with his own son or daughter living outside India. Still, because of the employment with his employer, he is eligible for getting the pension from the employer. Though he gets the pension outside India, but the pension is for only employment rendered in India when he was in India during the service period. So automatically this will be considered as deemed to accrue in arise or India. Third one is all about salary by government to an Indian citizen for services rendered outside India. So USA and India. Okay. Here Mr. A. Mr. A being working as an ambassador for India in USA. He is being the ambassador for Government of India, Government of India's ambassador, who gets the salary from Government of India, okay, for his services being the ambassador in USA. He renders service outside India. He resides only outside India. He never visits. Rarely he visits now and then for the emergency purpose. Rest case he lives only outside India. Right. In this case, the salary is payable by the Government of India. Service rendered outside India. Anyhow, his services for the Government of India. Then this will be considered as deemed to accrue or arise in India. Is that clear? In this case, Mr. A gets salary and allowances. Most of the cases, salary only will be considered as taxable and allowances will be totally exempted. So special rights they have. Perquisites and allowances are completely exempt under section 10 plus 7. For whom? For any Indian citizen working for Indian government outside India. Okay, means working for Indian government means he gets a salary from Indian government. Probably he may be working in embassy of India outside India. Then fourth one is all about dividend paid by an Indian company. If the dividend is paid by Indian company, that's an Indian income. Whether it is paid within India or outside India, doesn't matter. It is Indian income only. Always it is considered as deemed to accrue only in India. Hope now we'll be able to understand four aspects here. Okay, four aspects here. Section 9 plus 1. Okay. So, income from Indian connection in India, where business connection, property asset source in India, or transfer of capital. So, all these cases, the consideration is transferred outside India, yet it will be considered as deemed to accrue only in India. Salary earned for services rendered in India, even it may be pension later on. If the service rendered in India, then automatically it is the Indian income only. Some foreigners will visit India to render some services short term and again gets back to his own home country where he draws the salary. So, for example, USA and India, right? India, okay. So here TCS and TCS USA, okay, TCS USA, okay. So an employee visits to India for guiding TCS company and later on he returns to his own home country. During his stay in India for say around 20 days for training the employees of TCS, he is not getting any salary. He visits and gets back to USA and he gets a monthly salary from USA TCS. Though he gets a salary outside India, he resides outside India, but his service rendered only here for 20 days, right? For the 20 days salary will be considered as Indian income because deemed to accrue only in India. Is that clear? A number of models are there, ideas are there, but you have few illustrations in your mind. And this one, salary by Government of India as well as dividend from Indian company. Then fifth one is most important case. Fifth one is most important case here. Clear? Interest, royalty, fee for technical services. These are the three elements. Section 9, class 1, subclass 5, 6, 7. All the three are special incomes like interest, royalty, fee for technical service. Okay. All these things are payable to whom? Non-resident. If it is payable to a resident, no problem. We never bother about that. If it is payable to the non-resident, then automatically we consider this being income accrue or arise in India in certain cases. Right. Let me explain this concept in detail. Interest, royalty, fee for technical services. Right. Now, so if the payment is from Government of India payer, recipient being okay, non-resident. Clear? So this is the most important case, non-resident. What about the used state? Not applicable. Then will it be considered as deemed to accrue? Yes. Okay. Government of India to a non-resident gives either interest or royalty or fee for technical services. Okay. For what? Government of India may borrow loan or in case of some technical know-how. For that, rent is royalty is payable, and some technical support fees is also given. For all these sorts of support received by the Government of India is paying interest or royalty or fee for technical services. He is being the non-resident. Whether the amount received within India or outside India doesn't matter. Whether the loan, technical know-how and other things used within India or outside India doesn't matter. Wherever you use, no problem. Okay, if the amount is payable by the government to the non-resident, it will be always considered as deemed to accrue or arise in India. Clear? Next one is all about if the amount payable by resident person, payer being resident, to whom? To non-resident. Okay, resident makes the payment to non-resident, what? Maybe interest, royalty, fee for technical services. For what resident should pay? For the loan borrowing, technical know-how or technical services. Resident received lots of services from non-resident, maybe loan, technical know-how or some technical services. For that, of course, resident should pay the consideration to the non-resident. For the loan, interest is payable. For technical know-how, he has to pay the royalty. For the technical services, fee should also be payable, whatever it may be. Now, what about the scenario? Where do we use this one? Okay. Is it used in India or outside India? Okay. In India or outside India? If it is used in India, then automatically it will be considered as deemed to accrue. If it is used outside India, no, it will not be considered for that deemed to be accrue. Okay. I get the loan. So Adani constructed the port in Israel. You may know that, right? Similarly, some business people may establish their venture outside India. Airtel has presence over the other countries also. So they borrow, they get the technical know-how and all. Those things are used not within India, outside India. Okay, Adani may be resident, but he borrowed and he got technical know-how, technical services and all for establishing some business outside India. Whatever the payment done by such a resident, Adani to the non-resident, will be considered as not deemed to accrue or arise in India. If those things are used within India, then it is considered as deemed to accrue or arise in India. Is that okay? So, second part is resident. In this case, recipient being non-resident, provided the amount used where? The amount used in India or outside India. If it is used in India, of course, this is considered as deemed to accrue. Outside India, not considered as deemed to accrue. Is that clear? Third scenario. If the payment made by non-resident, to whom? Non-resident. Okay, borrower or the support enjoyer, maybe non-resident, loan, technical know-how or some other technical services. For that, this non-resident makes the payment to non-resident by way of interest and royalty, fee for technical services. These are the three special income we have. Now again the question comes, for what are the purpose it is used? Okay. Whether it is in India or outside India. Okay. If it is used in India, then automatically this will be considered as deemed to accrue. Outside India, of course, not considered as deemed to accrue. So the payment done by whom? Non-resident. To whom? Non-resident. So recipient and payer both are non-residents, so we don't have control over their transaction. But anyhow, the non-resident gets lots of loan and technical know support and all from another non-resident. But those services are used in India, then it is considered as deemed to accrue or arise in India. Automatically, it is going to be taxable. If it is outside India, no, it is not going to be taxable. Okay, this is yes, this is no. Hope now you'll be able to understand. I have given in such a way here. In the very first case, if the interest, royalty, fee for technical services received by non-resident. So recipient in all the cases being the non-resident, but payable by whom? If the payable by the government, then automatically it is deemed to accrue or arise in India. Okay, this is the first scenario. Second scenario, okay. Second scenario. Resident person, if the amount payable by resident person, we are talking about this. Okay, exception is there. If the money borrowed and used or technical services or royalty services are utilized for the purpose of business or professions carried outside India. This one, exception. This is exception. Is that okay? If the interest and fee for technical service royalty payable by resident to non-resident also considered as deemed to accrue or arise in India, provided for what? If those things are used outside India for making income from any source outside India, then it's called exception. So this is the exception, means it is not considered as deemed to accrue or arise in India. So this one will be considered as deemed to accrue or arise in India. Third scenario, in case of non-resident, payer is also non-resident and received by non-resident, recipient also non-resident. If the money is borrowed, okay, and used for the purpose of business or professions carried in India, then it will be considered. So in India it's used, then it is considered. If FTS as well as royalty services are utilized for the purpose of business or professions carried on India or making income from any other sources in India, this one only will be considered. Naturally, this will not be considered. This will not be considered. So these are the three cases we will consider this being deemed to accrue. So interest, royalty, fee for technical services. Three elements are there. Apart from the earlier thing we discussed, like salary for services rendered outside India or rendered in India but received outside India, and business connection, like some property are there in India. From there, if any income derived outside India, dividend income from Indian company, all these things are again deemed to accrue or arise. But finally, 5, 6, 7, these are the three elements: interest, royalty, fee for technical service. You can group that into single learning purpose, where the recipient usually being non-resident. Though the recipient being the non-resident, payment is made by whom? Government of India, sir. Government of India, fully taxable. It is deemed to accrue or arise in India. It is payable by the resident. If it is payable by the resident, whether the resident uses that within India or outside India. If uses that benefit within India, then it will be considered as deemed to accrue. Otherwise, it will be not considered as taxable purpose. Non-resident to non-resident. If that recipient non-resident enjoying the benefit of loan and other thing uses that benefit within India, then it will be considered as deemed to accrue or arise in India. Is that clear? Hope you will be now able to understand all these concepts. Now the last one. Income arising outside India is taxable. Income arising outside. Usually income arising outside is not taxable, right? Sometimes income arising outside India is also taxable, considered as deemed to accrue only in India. Being any sum money paid without consideration by a resident Indian to non-corporate, non-resident foreign company, resident but not ordinary resident, where the aggregate of such amount is more than 50,000 will be considered as taxable only. Okay. Okay. Being any sum of money paid without consideration. So resident Indian. Making the payment to whom? Non-corporate, non-resident. Means foreigner, foreign individual and foreign company. Or resident, not ordinary resident. Okay. Where he has given any gift. Probably a gold bar is given. Gold bar. Okay. If the gold bar's value is less than or equal to 50,000, so less than or equal to 50,000, then it is completely exempt. If it is more than 50,000, then automatically this is considered as taxable and deemed to accrue or arise in India. Recipient has to pay the tax. Recipient has to pay the tax. Is that clear? Gift. This 50,000 limit we will study along with the income from other sources, especially section 56 class 2 subclass 10. There will be referring. Now, We already studied here. Okay, business connection. Usually this is given in detail in explanation number 1. Okay, clear? So here are the explanation 1. For a non-resident, the following activities are excluded from being deemed as income accruing or arising in India. So, if it is being related to news agency, that will not be considered as deemed to accrue or arise in India. BBC visits India, or they have their own representative here to collect the news of India, news and views of India. Okay, definitely BBC earns the money because of the news telecasting. The news is telecasted in their own broadcasting. But of course, the income is not considered as accrued in India. Income from activities limited to collecting news and views. News and views. What about your opinion about this proposal, government's actions and all? We get the opinions, right? That's called views. News and views. To be transmitted abroad. That will be transmitted abroad, not in India. Is exempt completely news agencies. Similarly, we have few more items, especially another one being cinematography. So, Indian directors, film producers are visiting foreign country for a cinema purpose. They will use the foreign places to attract the viewers. Similarly, foreigners will also come India to use the Indian landscape for their purpose. In that case, any revenue generated from here will not be taxable, will not be considered as deemed to accrue or arise in India. For a non-resident individual, not an Indian citizen, you should not be Indian citizen, or firm or company, okay, should not be Indian citizen. Okay, firm with no Indian citizen resident partners, or company with no Indian citizen or resident shareholders. In case of a company, there should not be resident Indian citizen shareholder. In case of firm, there should not be Indian citizen partner. In case of individual, he should not be Indian citizen. So naturally, it is very clear that that person should not be Indian person. Okay, where income is not deemed to accrue in India, when if operations are confined to shooting cinematograph film in India, who are they? Non-resident firm company coming to India for shooting purpose and making any income will not be considered as deemed to accrue or arise in India, provided the non-resident should not be Indian citizen, should not be Indian citizen. And in case of a firm, the partner should not be Indian citizen. In case of company, shareholder should not be Indian citizen. Is that clear? And point number 1 and 2 here, goods for export. Okay, we see usually what happens, foreigners will order from India. Okay, in USA, they purchase the banyan cloths and all from India, especially Tirupur. Okay, it is exported from here to there, right? No issues. So, if USA non-resident or person coming getting the goods delivered from India, it's really a good sign for Indian government. So, because they get to forex, they get foreign income. India is very happy. But in case Mr. X appoints his agent, XC agent, whose main purpose is to purchase their material from various persons, accumulates later transfers. So he has an office in India only for procurement purpose. He is not doing any other business. So Mr. X can over phone place the order and get the goods delivered to his own country, no problem. But provided, what happens in this case is very, very important, right? He wants to verify the quality check, and he has to compare the various prices and all, rather than purchasing without knowing that it will be a loss. He will place his own agent in India, and the agent takes care of all these things. So he procures lots of things and dumps and packs and sells to his own boss, principal. That case, whatever the activity confined to this one, no procurement will not be considered as deemed to accrue in India. Goods for export. Income from operations limited to purchasing goods for export is not deemed to accrue in India. So his intention is only what? Purchasing goods. The intention is after purchasing, it's going to be exported. It's not going to sell in India. It's not going to be sold in India. Is that clear? Now, one more item. Business operations. Income of non-resident business is taxable in India only to the extent of operation carried out in India. So, Okay, USA as well as India. Clear? Mr. A. Mr. A does business in here in his own country in India also. Here he does around 100 lakhs rupees sales. Here he does sales for 10 lakhs rupees. So Mr. A's taxable income is confined to this one only, not this one. Not this one. Is that okay? So we will not levy the tax on all the 110 lakhs. So he immediately says, sir, 100 lakhs are generated only in USA, not in India. So only to the extent of 10 lakhs, accrue only in India. So for that only I have to pay the tax. Is that okay? This is what about the business operations. Excluding significant economic presence cases. Okay. This you will study at final level. You don't need to worry about that. Right. So the last one being diamond mining companies. Diamond mining companies may do some exhibition supply of what? Especially displaying. Foreign companies are displaying the diamonds. What type of diamonds? Uncut, unassorted diamonds. Okay. Where in specified notified zones, that will not be considered as diamond, means deemed to accrue or arise in India. So foreign companies will come to India in special notified zones. They will display the diamonds. It's not polished one, uncut, unassorted. Unassorted means the diamonds are classified as a category 1, category 2, like such a category is also not there. Uncut, unassorted diamonds. If those things are displayed in special notified zones, where it will be considered as accrue, deemed to accrue of in income in India, is not happening here. Is that clear? Now, let's see. Salary to government employee rendering service outside India. Okay, rendering service outside India. Right. Okay. Salary to government employee rendering services outside India. Okay. Already told you, no. Okay. USA. So here, Mr. SSA, an Indian citizen, a government employee serving in the Ministry of External Affairs, left India for the first time on 9th October 2022 due to his transfer to High Commission of UK. So he visits where? UK, India, and he is going to work in embassy or Ministry of External Affairs. So he is going to work in ministry. Then the payment will be given by Government of India. Okay, when did he leave India? 9th October 2022 itself he left. Okay, he did not visit India anytime during the previous year. Current previous year he has not visited. As he has not visited in the current previous year, he will be naturally non-resident. His status being non-resident. He has received the following income. Okay. So whenever the income received from the government of India, that will be considered as deemed to accrue or arise in India. If the income deemed to accrue or arise in India, then it is Indian income. Indian income will be taxable in the hands of all the categories of employee. Whether you are being ROR, RNOR or NR, whoever it may be, you have to pay the tax. Though he is being the non-resident, he has to pay the tax on this. Salary other than allowances being 12 lakhs. Of course, this will be taxable. What about foreign allowances? Exempted. Dividend from Indian company. Dividend from Indian company is always deemed to accrue or arise in India as per section 9. So this will be taxable. And what about the income from agriculture in USA? Okay, income from agriculture in USA. Agriculture income in India is exempted. Agriculture income in foreign is taxable, but it's a foreign income. Foreign income will be taxable only for ROR case. Okay, he is not being the ROR, so it's not taxable. Okay, not taxable. Clear? And income from house property in UK. Also, this is foreign income, so not taxable. So, taxable income in this case being only 14 lakhs. Is that clear? This will be taxable as per section 9. This will be taxable as per section 9, deemed to accrue. This will be not taxable as per section 10. Is that okay? Section 10 will study later on. So, just now we completed these two. And these two not taxable because these two are Indian foreign income. Foreign income is not taxable for non-resident. Is that okay? See the answer. Okay. Salary other than allowances will be taxable under this section. Of course, section not required for your examination purpose. Foreign allowance exempt under section 10 class 7. We will study that along with the salaries chapter. And dividend just now we discussed under section 9 class 1 subclass 4, as well as the agricultural income as well as house property in UK. These two are not taxable because these two are foreign income. Foreign income is not taxable under section 5, scope of total income. Section 5 deals with what? Scope of total income, right? So this is scope of total income. These two are deemed to accrue or arise in India. This will be all about exemption related to the foreign allowances. Clear? Section 10 is all about your allowance exemptions only, where section 10 class 7 deals with the allowances payable to the foreign means the Indian citizen payable outside India by the government of India, right? Hope the note is given in detail here. Section 5 class 2, non-resident is chargeable tax on his Indian income only, as this is being the foreign income not taxable. Section 10 class 7, allowances or perquisites paid by the government to Indian citizen for services rendered outside India are exempt from tax. So the following items are deemed to accrue. What are they? Number 1, salary by government of India to Indian citizen for services rendered outside India is taxable. And this one, fourth one, dividend paid by an Indian company to outside India. If you are able to give these detail, you will ensure good mark. Okay, so you better read those theoretical points also. Now, so given the slide data related royalty, you can have the glance over that. That's more than enough. Royalty, lump sum royalty not deemed to accrue or arise in India. Lump sum payment. Okay. So, in which case royalty will not be considered as deemed to accrue or arise in India if the royalty paid in lump sum not considered. And royalty is also defined. These two are given here as a notes. And rest of these points you can study at the last, not now. Just before the exam, you can have the glance over this. If a non-resident A borrows money from non-resident B, so non-resident, we'll see the illustration. He borrows the money from other non-resident. He is being A, he is being B, and invested the same in the shares of Indian company. This is used where? Indian company. Will the interest payable by A to B deemed to accrue or arise in India? Okay. So now the question is, if the money is used in India, automatically this is considered as deemed to accrue or arise in India. Already we have seen that, right? In case of non-resident, paying any interest, royalty, fee for technical services to another non-resident, for those receipts, the services are, for those payment, the services are used within India or outside India. If those things are used within India, then it is called deemed to accrue or arise in India. But investing in stock market in an Indian company is not considered as used in India. So it is not used in India. I am not working directly with that benefit, right? So in this case, it is not considered as deemed to accrue or arise in India. That's very, very important. It was asked once in the exams, right? In case of interest, fee for technical service and royalty. As investment is not in business or profession in India, it should be used in India, any business or professions. Investing in the companies, Indian companies share is nothing but investment. It's not business or profession. Is that clear? Similarly, fee for technical services. You have to understand what is called fee for technical services. Fee for technical services, usually consideration payable for managerial service, technical service, consultancy service, or any personal services. All these things are called services. Okay, technical services. For that, any payment you do know, that will be called as fee for technical services. But any fee payable for the technical services related to the construction, assembly, or mining projects. Okay, these things not considered as technical services. Even sometimes managerial services payable, which is chargeable or salary, will not be considered as fee for technical services. Managing director, XYZ company. Okay. MD in this case being MD in this case being part-time director or honorary director, part-time director. Okay. So he visits now and then, gives the consulting services and in his own excellency for the XYZ company's development. In that case, whatever the payment done by XYZ to MD, okay, this will be considered as fee for technical services. If the MD being director of XYZ, working whole time, okay, whole time director, and he also treated as an employee for the company, only name shake he is named as director. In some cases, right, director will come now and then, takes responsibility of the results, and he invests his own money and all. Who is called directing director, like Ratan Tata earlier, now Mukesh Ambani. He may be the director for n number of companies. Now and then he will come and go, part-time directors. Okay, whatever the honorarium they are getting is not part of salary, will be considered as fee for technical services. Apart from that, every division, right, in case of Tata, they have n number of wings. Tata Consulting Services, Tata Salt and Tata Consumables and Tata Chemicals. For each and every wing, they will have a full-time director to take care of the responsibility. Then whose payment will be considered as salary, and Tata salary, Ratan Tata salary earlier will be considered as fee for technical services. If the income chargeable under the head salaries, then it will not be considered as fee for technical services. Hope so you could understand. So small idea about fee for technical services. You have to understand the two terms here. Interest, three terms: interest, royalty, as well as fee for technical services. Rarely you may be asked the theoretical questions from here, but better you just have this glance over this topic. Clear? In the last class, we have completed this illustration, so directly I will move on to the next one. This illustration. Right. Lakshmi, an Indian citizen, a chartered accountant, is presently working in a firm in India. She has received an offer for the post of CFO from a company at Singapore. Okay. Presently, she is working in India. Right. So, definitely should be ROR currently, in the current year. As per the offer letter, she should join the company at the time between 1st September and 31st October 2024. She approaches you for your advice on the following issues to mitigate her taxability in India. So, Indian citizen, now she got employment, leaving foreign country permanently for an employment. In that case, what's the condition? Indian citizen leaving India. The condition being, to satisfy he is being the resident, ordinary resident or resident, you have to consider his stay in the previous year should be more than or equal to 182 days. Okay. The second condition, 60 days, and prior to that 365 days in 4 preceding to the previous year condition will not be applicable. It's normal case. So what we have seen, normal case, an Indian citizen or person of crew member and Indian ship leaving India, or Indian citizen or person of Indian origin visiting India. Here we have two category. One is less than or equal to 15 lakhs income and 15 lakhs more. These are the two categories we have seen. So 1, 2, 3, 4, 5. Okay, these are the scenario. So the one more thing being, irrespective of stay, based on the total income other than foreign income excludes 15 lakhs, where such income is not taxable in his country because of some bilateral agreement, some other reason, then he is also considered as deemed to be an assessee in India. Because of this one also, he is considered as deemed to be an assessee in India. Now, so we are going to study this case here. So Lakshmi wants to know at what time she wants to leave India, so that her stay should confirm that she should not be non-resident. Okay, she could be resident or non-resident, right? If she is non-resident, she is quite happy. She will not pay tax income earned outside India. So that's the reason she wants to ensure, will I be able to escape from tax liability? If it is so, when I have to leave? So I have been given this duration being the date of joining in foreign country. right? So from this it is very clear her stay should be not more than 181 days in India, right? So we start with the April 30 days, May 31, June 31, July, May, June 30, July 31, August 31. So currently how many days are there? 153. Then August, September 181 minus this one. How many days still we have? 28 days. So she has to leave on or before 28th September. 28th September 2024. If she leaves on or before this date, she qualifies being non-resident. If she is being the non-resident, automatically she enjoys no tax liability for the income earned outside India. So after that, she joins in a foreign country where she earns the money. For that, she is not required to pay the tax. Is that clear? Okay. Case 1, to become non-resident, say her stay should be less than or equal to 180 days. Hence, she should leave on or before 28 September 2024. Receive salary in Singapore and remit later for her mother, else taxable if received in India. Okay. That information is missing in question. So the next question is, will she directly remit that money in India? No, it's not so. Salary drawn there for working outside India, if she receives in India by her mother, will be taxable because received in India. She receives there itself. Sometimes later, if she transfers her mother, then it's called remittances, not taxable. Clear? Hope now we'll be able to understand. I think I have completed scope of total income in detail. We'll now start with salaries. Exemption you can study a bit later. Okay, we'll directly jump on to salaries chapter. Now, income from salaries. So, you know that section 14, already we discussed, classifies the income into 5 heads. 5 heads of income. 1 plus 4, 5. That's how I asked you to memorize very easily. Okay, 5 heads of income. Here, section 15 to 17, 15, 16, 17. 3 sections are going to be studied for salary. We have only 3 sections for salary, but almost it covers 20-25% of the entire content. Lengthiest one. We'll move on slowly with this one. 2 big chapters, 2 heads. One is salary, another one is PGBP. Once these 2 chapters are over, the third biggest chapter being capital gains. Once we cover the 3, it may be almost 70 or 80% of the entire study. Okay. In taxation, we are covering 80%, like 70 to 80%. Rest will be easy. We can rush through a bit faster. So my focus is to understand, make you understand the concepts, provisions, exemptions and exceptions and all these things in detail along on these 3 sections. And parallelly, once I give 1 or 2 illustrations here, you need to go home and try a number of illustrations, right? So we have the practice session on this. I will give lots of illustrations on this to master yourself. So don't miss those practice sessions also. Running in the morning sessions, right? In that will be in the other regular Tamil channel, so you can go and see that, right? 3 predominant sections. Usually, whatever the heads may be, 3 components will be there. One is all about what are the incomes are covered under this head. Is there any deductions available from those income? Income will be earned without any, so with some expenses only. No, to what sort of expenses can be deductible from your gross income? Is there some of the income are considered as exempted or not? So these are the three blocks are going to be studied. Here also, we have what are the incomes are falling under this head, section 15. Okay, what are the deductions I'm able to enjoy falling under section 16? And is there any explanation required for salary? Also explained under section 17. So these are the three sections. So chapter highlight. So what are the components are going to be covered? Income from salaries, section 15, chargeability of salaries. Is that clear? What are the conditions should satisfy so that it will be considered as salary under this head? Can we claim any deductions, sir? Of course, that will be falling under this case. We have three deductions, 1A, 2, 3, only three deductions are there. And what is called salary, sir? Can you define me? Then it is explained under section 17. So we'll now start with section 17 to master ourselves. Beforehand, a small intro about salaries and what are the general understanding we need to have before you proceed with this chapter. Right. Let's see. Now, to consider an income will be being a salary, some norms should be followed. Norms to fall under income from salary. Norms should fall. Is that okay? A makes a payment to B. Now, this payment could be for what? Maybe rent, or maybe salary, or maybe consideration for capital asset, maybe a fee for business or professions, fee or some others. Okay, sale consideration for goods, maybe not falling under the other category, not the above, none of the above. Okay, is that okay? So the payment could be by way of it may be named as rent, salary, or consideration for transfer of any capital assets, or fee for your professional services. If you are visiting doctor, you just pay the fee. Advocate, you pay the fee. And if in the case of business, you purchase a product, for that you will pay the consideration. Services, if you receive for that, you will pay the consideration. Some payment not falling under those heads. Okay. In general parallels, you will understand. If you are visiting doctor, it's fee. Okay. That will be totally different. Okay. If Apollo pays salary to the doctor, then it comes under salary, right? There is a slight difference. Okay. Apollo hospital pays the salary to their employees, doctors, then it's a salary. Apollo management can command and demand the doctors. If you pay 100 rupees, 200 rupees fees, can you command the doctor? I always averse with the green color, sir, give me tablet in red color only, then he will give the poison in red then. Right, so always it happens. You cannot command. Though you pay 100 rupees or 200 rupees to the doctor, yet you have to obey what he says only, right? So naturally, that will be called as fees for his professional services. For Apollo Hospital, that will be the big entity employer, like, and commands on doctor for the services and all, and that will fall under salary. It's general, but for the taxation purpose, I'm going to explain all these things in detail to clarify the classification, right? The first case is all about there should be employer-employee relationship. Apollo Hospital and doctor having the employer-employee relationship. A makes the payment to B. Okay, if A being the employer and B being the employee. So employee renders services to the employer. Okay, for that A offers him payment. That payment is called salary. Is that clear? So from this it's really clear the payer and the payee should have the relationship being the employer and employee, and the employer should receive the service from the employee. For that A makes a payment, that payment is called salary. That service, the service will be considered as terms of employment. Okay, if the service not being terms of employment, okay, then what are the payment done by A to B will not be salary. Is that okay? So you might have heard about in most of the organizations, the employer will give the employment to employee and pays the salary, gets the service. Sometimes the employer may be in need of The employee service for his personal requirement and his friend's requirement. He diverts his friend, employee, go and finish up that work and come, he'll get some extra money. So for the regular work he does for the employer, as per the terms of agreement in employment contract, whatever the services does and gets the money will be salary. Beyond that, personally, if there is any connection between employer-employee and rendered service by employee out of the terms of agreement, for that he gets special income. That will be considered as income from other sources. Is that okay? Now, now you have to understand one more thing is employer-employee relationship. Okay, no problem. For that, employee renders services, right? For that, employer gives salary. Okay. Now, A, B. B rendered service. A pays money. Payment is made. Right. In absolute sense, A says I am making a payment of 1,000. B says I rendered service to A. Now the question is whether this payment falls under salary or not. Then this will be decided based on the type of service. Okay. If the service being contract of service, okay, then it will be considered as employer-employer relationship, and of course the payment will be considered as salary. If it is rather than contract of service, if it is contract for service, then it is called not part of salary, contract for service. Okay, you have to note this point clearly. Contract of service and contract for services. So A and B entered into agreement of a contract of service. Contract of service means A says, I will give a list of 10 jobs. You have to do all these jobs whenever I call. Come to my office by 9 o'clock and leave the office by 5 o'clock. During the session, you have to work for me. That will be called as contract of service. Contract for service means A devotes just to divert some of the work to B, and B will have the responsibility to finish off and get the commission as at his own will. Based on its will, he will come at any time as he wishes and finishes the job and gets a salary, gets a payment. So this will be called absolutely nothing but contract. Okay, building contract or some other special contract. So I want to build a modular kitchen, renovate my kitchen with a new modern modular kitchen. Some X will come and does all these things on behalf of me. He's being the expert in that job, contractor, civil engineer. He does everything, no issues. Now it is not contract of service. It's what about the contract for service. You do this, you'll get 1 lakh or 5 lakhs, whatever it may be. Otherwise, you have to work for me day long. Okay, whatever the instruction I'll do. So already we have the agreement. I'll instruct 4 or 5 jobs and you have to do. As per that contract, if you are working for me, then it's called contract of service. See the main differences. Employer-employee services, employer-employee relationship. Number 1. In case of contract of service, contract for service. In case of contract of service, employer-employee relationship exists. In case of contract for service, not exist. Master control. In this case, A controls B. In this case, no. What A says, B should obey in case of employment. But in case of building contractor or some other thing, where he has his own freedom to come and finish up, the only thing is that he has to finish up. That's all. Right. And he is also expert in his job. Execution of work. Execution of work is under supervisor's, employer supervision. Here, his own discretion. Okay. In case of remuneration, this will be usually monthly. This is based on the profit or loss. Finish off and get the salary. Okay, get the consideration. And at what head it is going to be taxable? In case of contract or service, it's going to be taxable under salaries. This is taxable under PGBP. Is that clear? Next. And salaries and wages conceptually not different. You don't get confused with the different terms, salary, wages, whatever the term may be, whether it may be salary or wages, both are same and taxable under salaries head only. Salary from more than one source also be taxable. Okay, I work day long to Mr. X, and in the evening part time I work for B. The salary I'm getting from the day work as well as evening work, both will be considered as salary only. So you can get two or three sources for salary. So you don't say that I get salary from only one employer. I may get salary from two or three employers also, will be considered as salary taxable to the head. And sometimes we may have some extra duties, office hours. After the office hours also, for the emergency, employer may ask you to work extra. For that you may be given overtime premium payment also. That may also be considered as taxable under salaries only. Salary you will get for your full-time job or part-time job, whatever it may be, will be taxable only, even though your salary may be in cash or in kind. Means nothing, but it's not in the form of cash and benefits. Okay, free car, free house. If I'm getting any free residential house to stay, the benefit of the worth of staying will also be considered as salary only. You have to monetize this, so you have converted money value for that, and it will be your salary and taxable. If I'm given a free house quarters to stay, so the usually what's the price for the stay you we charge if it is let out to outside, maybe 15,000 rupees. That 15,000 will be considered as your salary. It may not be in the form of cash, it may be in the form of kind also. So salaries and wages conceptually not different, and salary from more than one source also taxable. Remuneration, if you are receiving for the extra duties after the employment hours, will also be considered as salary only taxable. The salary may be for the full-time employment or part-time employment, or even that salary may be in cash or kind, will also be taxable. Is that clear? Now let's see here to make you understand the two different concepts here: surrender of salary and foregoing of salary. Surrender of salary and foregoing of salary. Is that clear? Let's see what is called surrender of salary and foregoing of salary. So employee renders services to employer. An employer is very happy. Excellent service, sir. I'll pay salary rupees 2 lakhs per month. Employee says, sir, I'm not worth for so much. I'm worth for only 1 lakh 50. You take back 50,000 rupees, sir. Offer me only 1 lakh 50. You just keep it with you, or you can spend this for any purpose. Such a way, if he foregoes his salary for employer and draws net salary only 1 lakh 50. Now come on, tell me, what is the taxable salary in the hands of the employee? For employee, the taxable salary being 2 lakhs. You say that, sir, I'm getting only 1 lakh 50,000, sir. No. The moment you have the rights or the amount, then it becomes your salary. I have the right on the 2 lakhs. Whether the 2 lakhs I spend for my purpose, I throw it to somebody else, or I gift it to somebody else, or lavishly I spend, doesn't matter. The moment you have the right over the 2 lakhs, then it's your income. You have the right over the 2 lakhs. Out of the 2 lakhs, 50,000 you are just transferring. 50,000 is just transferring. Okay, it's a diverting. It's only diverting, like, and automatically what happens? Whatever the purpose may be, you are surrendering to the employer. This will be called as foregoing of salary. Foregoing of salary is taxable only. And sometimes it may happen, no. There may be earthquake and tsunami, flood. Automatically in a company, all the employees put together, sir, out of our salary 5% you deduct and donate to that specific purpose. In that case, his salary is 2 lakhs, 50,000 deducted and donated for the victims of earthquake, whatever it may be. In that case, sir, in that case also you have to pay the tax on 2 lakhs. Sir, it's a good cause, sir. If it is being the good cause, there may be chance to claim deduction under section 80 series, if it is allowed. But in the modern latest tax rules, okay, default tax regime, you cannot claim any deductions currently. Is that clear? You understand? Whatever the purpose may be. Now, remember one more aspect. Employee renders service to employer, and employer offers him salary. 2 lakhs. Is that okay? And in this case, employer being government of India. Okay, government. Okay. Whoever it may be. Now says, just pay me 1 lakh 50 only. This 50, is given to government itself. Okay. As per, given to government itself as per voluntary surrender of salaries act. Surrender of salaries act. Hope now you'll be able to understand. If the payment deducted amount is for the government as per the scheme framed by voluntary surrender of salaries act, then employee's salary in this case being 1,50,000 only. He has to pay tax only under 1,50,000. Okay, it's a special privilege. Surrender of salary to whom? To government itself. As per which scheme? Voluntary Surrender of Salaries Act scheme, 1961. By whom? This employee could be government employee or non-government. May be government or non-government. The person who is surrendering may be government or non-government, doesn't matter. In that case, this 50,000 is not taxable. You have to pay the tax only for 1,50,000. Is that clear? Some special points we are discussing related to the salaries here, one after one. Clear? Any doubts here? Now, point number 8 and 9. These two are pretty interesting one. Salary paid tax free, tax paid on perquisites and all. Right. Now, employee. Is that okay? Employee rendering service to employer. For that, employer offers him salary. Say 1 lakh per month. Tax applicable on this being, say 10,000. Tax applicable on this being 10,000. Now it's the employer's responsibility to pay the tax. No. But employer says, don't worry. Tax on this is paid by me to the government of India, stating that this is the amount payable for you. Can I do so? So this is called tax-free salary. The salary what I offer you, you can enjoy absolutely. You no need to pay even single penny to the government. For whatever the amount you receive for the applicable tax paid by me itself. No need to worry about that. You no need to worry about that. Will it be possible? Then it is called tax-free salary. Will it be possible? Nah, definitely it's not possible. Definitely it's not possible. Now Government of India says your taxable India income being salary 1 lakh. Salary 1 lakh. Is that okay? The 10,000 rupees you say, sir, I didn't receive. Whether you receive it or not, will also be salary because perquisites is also salary. Tax paid on your salary will be a part of perquisites. Perquisites is nothing but amount not being in the cash form or it may be beneficial form. So it's a benefit. That will also be considered as tax on salary will also be considered as your income. So your income is 1,10,000. I calculated an average rate of tax being 10%. Now the government says your tax being tax on this total income at the rate of 10%. So 11,000 is your tax. So now you have to pay 11,000 rupees to the government of India. 11,000 rupees. While making the payment, this is already deposited from by the employer for that can be subtracted. That will be available as TDS like some name. You can subtract balance 1,000. You have to pay further. So if from this it is very clear we cannot offer tax-free salary. If I say any tax-free salary, that extent of tax paid by the employer for the employee's income also will be addable with your income that together with you have to pay the tax. On the tax, existing tax paid by the employer can be subtracted. Balance should also be payable. Only this 1,000 you have to pay. Is that clear? Now, In the employer's PGBP, okay, what is the income for the employee? Income for the employee being 1,10,000. For employer's PGB, profit and loss account, you know how much he can debit? Salary, he can debit how much? 1 lakh, and tax paid on that also be considered as his expenses for the employee 10,000. So the overall expenses debited to the P&L account in the books of employer being 1,10,000. What the amount debited in the employer's account? 1,10,000. As it is being the expenses for him, for employee it is going to be a receipt, income. Is that okay? The debit here is as per the PGBP provision under section 37. We'll study along with the PGBP later on. You don't need to worry about that, right? Now, clear? Tax-free salary is not possible. Tax paid by the employer for the salary, also part of expenses for the employer, also part of his income. Okay, for the employee. Employee. Now, employee rendered service to employer. For that, employer offers him payment. That payment may be in kind. That payment may be in kind. Maybe perquisites. Okay, especially perquisites. Free facilities given. Free laptop. You can transfer the old laptop used by the company is given at free of cost. Though it is given at free of cost, a nominal value is identified usually. That value will be considered as salary. Okay, company's old car, 5 years or 6 years later, rather than used by the company anymore, given to one of the employees, you can use it. Okay, the old car today's worth may be 5 lakhs, but he paid only 2 lakhs, means difference 3 lakhs will be his perquisites. If the 5 lakhs today's worth depreciated value 3 lakhs, so 5 lakhs, offered at free of cost, the entire value will be considered as perquisites. 10 lakhs worth the car. For some years, it was used by the company, so they have depreciated 5 lakhs. So today's value is only 5 lakhs after depreciation. If the depreciated car is offered to the employee at free of cost without charging even single penny, the entire 5 lakhs is the salary. But the salary is not in the form of cash. It's in the form of kind. If it is in the form of kind, it may be sometimes named as perquisites. So here the value being 1 lakh. Employee has to pay the tax on this 1 lakh. But the employer says, no need to worry about that. Car worth this 1 lakh is your salary. And the tax on this 10,000 will be payable by me to the government of India for you. I will pay this. I will pay you. Now later on, employee what has to do? He has to calculate tax on this, which is 10,000 rupees. Already this 10,000 is paid, that is subtracted, so no tax is payable. Will I consider this 10,000 as my part of income, sir? No, not required. This income will not be added here. In this case, this 10,000 is also added. Here, this 10,000 not required to be added. Okay. Tax on salary is taxable. Tax on perquisites not required to be added. Tax on perquisites, anything given in non-cash form, some small benefits you are enjoying named as perquisites, for that any applicable tax paid by the employer on behalf of employee is not considered as your income. Right. Now, what about the PGBP? While preparing the profit and loss by the employer, the amount debited in this case being only 10,000, so 1 lakh. What about the tax on this, sir? No. So from this, it is very clear. For the business person, 1 lakh is the expenses. For the recipient, 1 lakh is the expense, income. In the earlier case, for the business person, 1,10,000 is the expenses. For the recipient, 1,10,000 is the income. You understand? These two should match. These two should match. Clear? Salary paid tax-free. Salary paid tax-free. Taxable to the extent of tax liability paid by the employer. Tax liability paid by the employer is 10,000. On that, tax liability being 10% is equal to 1,000. So from this, it is very clear. The tax liability on the employer's tax payment extent is he has to pay the tax. Okay. Tax paid on perquisites is exempted as per section 10 class 10 cc. So this will be exempted. This will be exempted under what section? Section 10 class 10 cc. So he says my salary being 1 lakh and tax on perquisites are tax on perquisites is exempted under section 10 class 10 cc. You know that section 10 is also a compiled form of exemptions. We have a list of exemptions given under section 10. As we already studied, section 2 is all about definitions. We have lots of terms defined under section 2. Similarly, section 10 deals with various exemptions, right? So as we have been given a list of exemption where section 10 class 10 cc says tax and perquisites not going to be taxable. Similarly, here this will be deductible under section 37. This is disallowed to be deductible under section 40 class A subclass 5. Okay. So this is deductible under section 37 and automatically that is going to be taxable under section 16 17 salary. Okay, under section 17 salary it will be taxable. Clear? You have to remember this one. If the employee, whatever the income receives from the employer, consider this being the income, same amount will be considered as expenses to debit in his own account. Okay, if some item is not considered as his income or exempted, payer should also not consider this being the expenses to be claimable. Is that clear? Hope now you'll be able to understand. So, tax on normal salary in the hands of employee taxable as perquisites. An employer can also consider this being the expenses deductible. In case tax on perquisites, employee will not consider for the payment of tax as per section 10 class 10 cc. For employer, of course, as he is considered as exempted not income, for you it's not expenses. If it is my expenses, it should be your income. If you are purchasing a note for rupees 100, you spend 100 rupees and the storekeeper will say 100 rupees is revenue. Once revenue is equal to the other's expenses. Okay. If he says it's my expenses, it will be his income. Okay. It's income. But if he says it's not my expenses, definitely it's not his income. Clear? So he has not considered this being the expenses. Similarly, it is not considered as his own income. Okay. Make note of it. Make note of it. So this one. Here expenses, here income. In this case, here no expenses, here no income. Non-tax and perquisites exempt and it is not deductible in the books of employer also. Clear? Hope now you'll be able to understand. Salary paid tax free and tax paid on perquisites. Two terms. Earlier we have studied two terms. Surrender of salary and foregoing of salary. Earlier this one you can easily understand all these things. The most important point you have to start with this one. Contract of service, contract for service. Contract of service is a regular employment. What we mean that it will be coming under salary. Contract for service comes under PGBP. It's a business. PGBP is nothing but business or professions. Right. Now, listen. In case of salary to a partner, okay, in a partnership firm, okay, ABC partnership firm. Okay, where A being one of the partner, he draws salary. This salary is not considered as salary. In the hands of A, this salary will be considered as PGBP only. Is that okay? Clearly stated. You should not ask the question, why sir? That question should not come here. Okay, in Singar Academy, whatever the salary I am drawing as a partner will be considered as my PGBP income only. Either it will be taxed as per the PGBP income by Singar Academy, or if it is added to me, I have to pay the tax at the rate of 30% because it's a PGBP income, right? Salary to partner, taxable under income from business or professions, PGBP only. Okay, sir, salaries are no, the term will not be applicable here. In case MP, MLA, MLC, all drawing the salary from the government of India, right? State government, central government, they are drawing the salary from the government, right? That will not be considered as salary, that will be considered as income from other sources because government and MA is MLA and MP are not employer-employee relationship. There is no employer-employee relationship between them. Okay, they are merely representative of the government. Okay, public's representative. Okay, parliament and member of parliament. So member means not employee. They are being the part of the decision maker and representing for the government. So they are called members of parliament, not being the employees. So any amount drawn from the government of India, though it is named as salary, will not be considered as salary. As it is not salary, can it be rent? No. Can it be business? No. Can it be capital gains? No. Then automatically it falls in the last head. Last head being income from other sources. Clear? Now, already explained in the previous case, director. Director's salary. Okay. If the director receives any salary from the company, verify whether the director is being the full-time employee or works as a honorary path. Now and then he visits. If he is being the full-time employee, then the director what he drives gets from his company will be salary, including commission. Okay, Mr. D being the director of ABC. Okay, what are the service he renders, and he gets what? Salary. Even sometimes he gets commission. Okay. Now check whether he is a full-time director. Yes, sir. He is full-time, sir. Full-time means these two are considered as salary only. No, sir. He works now and then, sir. Honorary portion, part, sir. Part-time. Then these two will be named as either PGBP or income from other sources. Predominantly, it will be classifiable as income from other sources. It will be classifiable as income from other sources. Okay. Even in this case, not only this, one more item also be addable. One more item, which is nothing but sitting fee. Sitting fee. That sitting fee also be considered as income from other sources. Is that clear? Hope you will be now able to understand. Salary. Salary to the whole-time director. Okay, whether it may be named as salary or commission will be classifiable as salary and taxable under this head only. If I am being the part-time employee, now and then I come to administration purpose and express my opinions and give some consultancy, then I may be a part-time director, honorary post. In that case, if I get salary or commission, whatever name may be, that will be considered as income from other sources, including sitting fee. Now and then the meeting will be held, right? Board of directors meeting, an annual general meeting. For that, these honorary directors may attend. For sitting in the directors meet, they will get some commission. So I thought sometimes ago, for sitting in my class, I will give the fees back. So I collect 30,000 or 40,000 rupees fees from you. If you attend my class every day, while leaving my class, you will get 100 rupees sitting fee. Nice, no? So don't ask me when can we implement that, sir. Okay. So similarly, the directors will be given the sitting fee to attend the directors meeting. That sitting fee is also considered as income from other sources. Hope so you could understand. 12 and 13. 12 and 13. Now, already we studied this one. Instead of salary, it may be sometimes named as fees or commission, also taxable. And pays of accrual. We have studied this along with the illustration in the earlier chapter. Scope of total income. Right. Salary earned in India. Service rendered in India. Mr. A, citizen of India, is posted in USA as an ambassador, where he gets the salary from Indian government. Renders outside service. Renders service outside India, yet it will be considered as deemed to accrue only in India, provided any allowances given to him is exempted. So all these things already we covered, so you can skip here. Along with the illustration also we studied. And this one, exemptions of salary for foreign state officials. Foreign states officials. Now, so I started with chapter highlight, income from salaries. Section 15 is also all about chargeability of salaries. Section 16 deductions. Section 17 salaries we have studied. Not only that, we have to study a list of exemptions falling under this salary head. Here we have already studied section 10 class 7. What is that? Allowances or perquisites paid by the government to Indian citizen for services rendered outside India are exempt from taxes. As I already told you, if you first study the section 10, you will get lots of confusions. You go through with the other chapters, now and then you study one or two exemptions. You can link all those things at final stage. Okay, here, this one, section 10 class 7. Apart from that, this is all about section 10 class 7. Apart from that, section 10 class 6. Section 10 class 6, this one. Remuneration to not citizen of India. Okay. Now, foreign states official. Like our ambassador, our employees, government of India's external ministry, right? Our employees, government employees are sent outside India to work in their foreign embassy, in foreign, okay, in foreign country, in Indian embassy. Is that okay? For that, salary is payable. No, usually considered as Indian income. Means tax is not leviable on those income by the foreign government. Okay, so USA as well as India. Here Indian embassy is there. Here A is working. The payment is made by government of India. USA says A is in India, in USA only, no. So he is being the resident. Can I levy the tax on that? So then definitely there will be a treaty between USA and India. If A being as an employee working in the Indian embassy, I will take tax on that. You don't levy the tax on that. Immediately, what would be the retaliation? In India, US embassy will be there, right? For X, where X may be the US citizen working in India for US embassy. For that, US government will pay the salary. And how we demand don't levy the tax on this, and the US will demand India don't levy the tax on this. Right. This is what about foreign state officials. Exemption of salary for foreign state officials. Salary received by a foreign citizen. So X being the foreign citizen, working as what? Official of an embassy, high commission or consulate. Okay. Member of their staff for services rendered in India, and member of their staff members also. Okay, these two cases. Condition: remuneration of Indian officials and staff in foreign countries should be exempt. So for this income, A draws 10 lakh salary. This is not taxable in USA. Only then this is not taxable in India. As it is not taxable in USA, the income drawn by X not taxable in India. Remuneration of Indian officials and staff in foreign country should be exempt if the corresponding foreign officials and staff in India enjoy similar exemption. If my employees are enjoying some benefits in your country, then your employees will enjoy the same conditions here. Such a staff of foreign states should not engage in any other business, professions or employment in India. They should not involve in any other professions or business or employment in India. Is that okay? If we are giving the privileges to be a member in the embassy, US embassy in India, they should do only the embassy activities. Should not go beyond that, right? You might have heard about lots of violation also. Some embassy people, they did spy operation, got thrown out of India, and some embassy people did some spy operation outside India, thrown out of their country. Everything happens. So there are some restrictions. So as per section 10 class 6 subclass 2, foreign state officials working in India for foreign embassy, okay, foreign government makes any payment, that will not be taxable here, exempted. Is that clear? Now similarly, fourth one, exemption of remuneration received for services rendered in India as an employee of foreign enterprises. Okay, so some foreign enterprises will send their employee in India rendering some services, okay, provided the foreign enterprise is not engaged any trade or business in India. Okay, this is USA, India, okay. This may be XYZ enterprises. XYZ sends his employee to India to render some services here. They don't have any business activity here. The foreign enterprise not engaged in any trade or business in India. This employee comes in India, no. His stay is less than or equal to 90 days only. Why, sir? XYZ could send some machines. Okay, ABC company purchases a machines from XYZ. After the installation, they got stuck to operate this. Immediately, they raise a complaint to XYZ enterprises. Then XYZ says, no need to worry about, sir. We will send our representative to take care of this and guide you how to use that. So he comes only for that purpose and stays not more than 90 days. Okay, this XYZ has no other business connection in India. and such remuneration should not be deductible from taxable income of that enterprises. Okay, in their P&L account. Okay, if the payment made to this employee being say 5 lakhs. Okay, suppose XYZ shows the profit or loss for the Indian concern, Indian government, this salary 5 lakhs cannot be deductible. So I already told you, no, if I consider the payment being my expenses, it should be income like for the recipient. For payment, I claim deductions from the government. For the recipient, it is the income he has to pay the government income tax. So anyhow, you claim and I'll collect from him. If you don't claim, I don't collect from him. So you should not collect, so I don't collect from him. Is that okay? That's the logic between these two. These three conditions should be satisfied. Any employee of foreign enterprises visiting India for a temporary period, not more than 90 days, okay, can stay here and enjoy the benefits without paying the tax. Provided that enterprise should not involve any of the activities in India, and that remuneration cannot be debited to the P&L account of XYZ if the XYZ company is supposed to pay any tax in India. Okay. If the XYZ is not responsible for paying any tax, no need to worry about it. If there is any tax liability payable in India, that cannot be deductible. Section 10, class 6, subclass 7, 8. Exemption of salary received by crew member of foreign ship. Crew member of foreign ship. Okay, provided he is a non-citizen, non-resident, and his aggregate stay is 90 days. As you know that crew member of Indian ship visiting foreign country now and then. So he will be working in ship, travels country to country. Okay, voyages, right? So there will be lots of travel. While traveling from one country to the another country, during the time of unloading in another country, he visits there nearby. So that country, that government will give some relaxation. Similarly, foreign crew member will visit India while doing unpacking and unloading and all in Indian port. They can visit and stay in India, allowed up to how many days? 90 days. Not more than 90 days. For that, any income they generate as a salary will not be taxable in India. Is that clear? The last one is all about remuneration received by an employee of a foreign government. Similar. Foreign enterprises like foreign government, right? During training in India is exempt. If the training is in connection with, so coming to India for giving some training, the training is given to whom? Government establishments are undertaking, or government owned company, or subsidiaries of such government owned companies, or statutory corporation, or Societies Registration Act. Any societies under the Societies Registration Act or similar laws. So from this it is very clear. Foreign citizen visiting India to train whom? Government establishments or government undertakings, or government companies or their subsidiary companies, or some other statutory companies or societies. Okay, if they are coming here for training these enterprises, the salary what they get will not be considered as taxable here. Hope now you'll be able to understand what are the aspects are covered under salaries. So the norms to fall under income from salaries and so exemptions also we have covered under section 10 class 6.